Everybody, I'm Kelly Kowal, the Chief Platform Officer, and I'm really excited to be talking to you today about FPS and our B2B business unit. Now, you may be asking yourself, what is a Chief Platform Officer? And really that means two things. The first is leading and running FPS, which I've been doing since the inception of FPS in 2015. And the second is driving our platform evolution and strategy for future growth. Now, my background has predominantly been in the startup space, running e-commerce and digital transformation for brands and retailers, with the most notable startup being Farfetch. And I say that, as Jose said, I've been with the company over 12 years, so nearly since the beginning. And when I joined Farfetch, I joined to start up and lead the digital marketing function from scratch. So everything from acquisition to retention to user experience. And from there, I moved to a role where I was core at leading our international strategy and development. And so critically for this conversation, that means I understand our platform, but also I understand what it means to drive a global e-commerce business for our clients, because I've done it. Now, I look forward to talking to you today about the FPS offering in more detail, why we are the technology partner of choice in the luxury industry, and how we are set up to generate profit for the business. Now, as I said, FPS is quickly becoming the technology partner of choice. We started FPS in 2015 and launched our first client in 2016 with our core end-to-end e-commerce offering. But we knew if we wanted to scale and partner with large-scale enterprise businesses, we needed to diversify and modularize our product offering, and that's something we've been doing since day one. So we went from launching 9 partners by 2017 to having an innovation partnership with Chanel the following year. And by 2020, we signed Harrods, one of the most iconic luxury department stores in the world. And as you know, we announced our most recent partnership with Neiman Marcus and Bergdorf Goodman, and earlier this year to launch in 2023, which we're very excited about. Now, all of this means significant opportunity. FPS is still in its early days, but we have quickly proven we have become a partner of choice. And why we are the partner of choice is because of our platform. Our platform is built by luxury for luxury. And what I mean by that is we use our own product. It's the same platform that powers Farfetch.com, and FPS offers immediate access to those same operational strengths to our partners. Now, I'm not going to break down all of the services that's on the slide, as Edward will go into it later today, but the important message is that we build these directly into our platform, so we're one integrated platform. So for instance, our partners and our clients, instead of having multiple vendors to run logistics or payments or even product catalog, we offer these directly from our platform with a seamless integration. However, we've also created the platform to be modular through a series of microservices, which means we can tailor the offering based on what our customers need. And by being an integrated partner, this means we offer a multi-channel, seamless user experience for our customers. But the platform isn't the only reason they choose us. Now, we know there are a lot of platform choices out there, so what I wanted to talk to you today is about why our partners also choose us besides the platform. And really, our platform offering is unique and is built around 4 key USPs. Now, that first one is global partnership. Farfetch has been global since day one. It's in our DNA. But it's not just about shipping globally, but how we localize, how we acquire customers, how we think. We can be strategic thought partners for our partners, and they love this. But equally, what they really love is that word partnership. We are a tech partner. We are not a tech provider. And this is what our clients love this. They love to know that there's somebody on the other side helping them through this. The second one is connected retail. This is really about connecting the customer experience both online and offline, and connecting our partners' inventory to wherever the customer is shopping. Now, we know customers shop in multiple forms with multiple retailers, and we want to facilitate that transaction wherever it may be. The third is modular solutions. We provide modular solutions and services tailored to our partners' needs. No 2 partners are the same, so we have a series of products and solutions that we can use to really drive our partner strategy. And the last is innovation. As I said before, we use our own product, so we never stop innovating. Innovation is at the heart of what we do. Now, all of this gives us a unique position, which of course means opportunity. So now let's turn to that opportunity. But before I do, like I said earlier, no 2 partners are the same, especially in luxury. That's why it's important to have different products to address different needs, so we can partner with brands and retailers in different ways. But more importantly, this opens our addressable market. Now, the first is our end-to-end e-commerce product, which is our long-standing and core product offering. Now, what I've done here is I've shown you some generalist competitors on the bottom in each of these 4 areas to show a comparison of the market. But of course, the key thing here is that they only do one of these offers. We offer an integrated solution, so you can have our standalone e-commerce product offer, or you can add these modules immediately or as and when you're ready. Now, the second is our e-concessions as a service product. This is incredibly important because this is where the industry is headed. We have over 600 luxury brand partners already integrated into our platform, and that inventory can be activated for our platform customers, meaning someone like Harrods can tap into this inventory because they are integrated into the platform, and they can immediately start selling that inventory on their own brand.com. Now, brands are going direct to consumer, but it's really difficult. Brands have multiple inventory points, multiple retailers, and it can be really inefficient to manage. But with one single integration, FPS unlocks the world of luxury retail. Now, the next is global logistics and payments. Our partners love this. It's robust, it's scalable, and it's efficient. Now, up until now, this has been a subset of our end-to-end e-commerce, but partners love it so much it's becoming a standalone capability. And as you may already know, we'll be launching with Neiman Marcus next year as our first standalone logistics client. There's so much potential in this, and we're really excited about this product. And the last is connected retail. This is so much more than just in-store technology. It's a seamless customer journey, whether that starts online or offline. Our technology offers a personalized experience at multiple touchpoints, whether that's physical, digital, or even now virtual. So it's wherever that customer is interacting with our partners. So as you can see, by creating various product sets, it gives us opportunity to drive sales across various product segments and to grow our market share. And looking at those segments, we have huge opportunity to play in, and our TAM is close to $425 billion, and that's because we play in different spaces. So when you put this all together, it means growth. Growth for our partners and growth for us. Now let me show you how this growth translates into revenue. We have a very strong revenue engine, which is predominantly made up of 3 buckets. So the first bucket is delivery. This is a one-time fee, and this is really our upfront build and implementation fees. Now these fees vary in size depending on the complexity of the project. We start billing though from day one, so that means we start generating revenue from day one as well. So from there we launch, and then we move into what we call run. That's where we take a revenue share. And this is why our partners' growth is so important to us. When they grow, we grow. And the last one is our services, which are all priced separately. What's really interesting is that what Farfetch.com would see as cost centers, these are really our profit centers. And this is because the services that we built for ourselves, we are now capable of leveraging that work for our partners. And these services really do help to facilitate additional growth for our partners, whether that may be demand generation or even things like localization and potential, Chinese customer service where they're not going to be doing that themselves. We can actually offer that to augment their existing services they have today. So all of this means profit and all of this means margin. And why margin is so important to us is this is the basis for how we price. Our pricing is driven by target margin. We do not use the commission rate as our starting point. So just want to say again, we use a target margin. From there, we look at the inputs that would then effectively drive what that take rate needs to be. So for instance, we look at what products and services are they using. So this will vary from client to client. What are then the operational costs to support those products and services? So i.e. what's the cost to actually run? And the last is what sort of order volumes will be running through the platform. From there, what we do is we then calculate what the take rate needs to be in order to hit that target margin. So starting with the target margin means controlling profit, which Elliot will take you through in his session later this afternoon. Now, our revenue model also provides economy of scale for our partners. So I provided an illustrative example of how our fees ladder up, but more importantly, what I've done is I've compared it to a typical competitor set. Now, when we look on the chart on the left, you can see the relative cost for each service it takes to run a comparative e-commerce business. And because each one is a standalone service or contract or different vendor, it's difficult to get economies of scale because you have different contracts, different rates, and you don't benefit from volume-based discounts. All of this is really costly and effective. Now, when you look at the chart on the right, you can see our blended commission rate is lower because these services are typically included in our commission rate. And now there's 3 real reasons of why we provide economies of scale. The first one are around fees. So we offer direct savings on things like credit card fees or shipping rates. Because we have such strong order volumes, we typically have better rates than a standalone retailer. And then we pass these costs directly to our partners, and we pass through the savings as well. So for instance, we're working to save one of our partners currently over $1 million in shipping costs alone in the next year. The next one is around tooling. Our tooling is built into the platform and has proprietary tools, so there's no need to have an additional CMS or OMS or PIM. These tools are essential to running an e-commerce business, and these are included in our offering because we know how important they are. Now, this saves on costs, but it means less vendors to manage, a streamlined tech stack, and more efficiency. This is also similar to something like additional services to facilitate e-concessions or even global shipping. And the last is resources. Our partners don't then need to build up big teams that aren't their core competency. And by doing this, they can unlock the focus to what really matters to them, and that's building an incredible brand and an incredible retail strategy. We can also flex up and down resourcing because of our model, which then means we can be nimble to our partners' needs. So when you add up those savings with the efficiencies, it means less cost to our customers, which then they can reinvest in their digital business, reinforcing their D2C strategies. Now, this is precisely one of the reasons that Harrods chose to partner with us. And this is a quote from Andreas, who's the CIO at Harrods, who is one of our big partners. So Farfetch has been a strong partner for Harrods. We selected Farfetch due to their software as a service platform, whilst allowing us the capabilities to enhance our front end with FPS, moving away from a complex in-house stack of multiple vendors, and has made economic sense to Harrods. Their experience in luxury and willingness to mature their platform for multi-category has been essential in our partnership. So as you can see, our partners are actually recognizing this value. So we've talked about the opportunity, how we built a platform for luxury, how our 4 key products address multiple ways to partner, all of which are underpinned by a really strong revenue model. This all brings value to our partners, But now I want to turn our attention to my favorite thing to talk about, and that's our clients, and that's their success. I want to show you the key results of what happens when we bring all of this together. So the first case study I want to showcase is Thom Browne. Thom Browne has a fantastic vision for their direct-to-consumer strategy, and we were so excited to work together to bring that really to life for them. Now, Thom Browne originally approached us because they were predominantly a US-focused brand, and they wanted to unlock their international offering and expand their customer base beyond the US. Now, our approach to unlock this opportunity was to create a rebranded global website, also with translated and localized versions into Chinese, Japanese, and Korean, which were really key markets for them. We then activated global logistics to allow them to ship internationally. We rolled out various local payments and currencies in other markets. And all of this was underpinned by a really strong international digital marketing campaign to drive customer acquisition and retention. And the results have been incredible, seeing 173% global growth in 2 years. They're now shipping to 190 countries and territories, and we've seen really strong performance in those key markets I mentioned, with over 800% year-on-year growth in South Korea, nearly 150% growth in China, and 36% growth in Japan, just in the first year after launching these territories. International still remains a huge part of their overall business and their overall strategy. But what I think is even more remarkable is when you look at it holistically. Thom Browne has seen a 67% GMV CAGR by expanding the partnership to use the full suite of the Farfetch ecosystem. Now, they started as a marketplace customer, but then they quickly became a full suite of FPS products and an FPS customer. From there, they started to use our in-store technology, which was crucial for their retail strategy. Now, I don't know if many of you know much about Thom Browne, but they have very small stores, which mean they don't carry all of their inventory. But by using our in-store app, they could offer the full breadth of inventory to their customers because we are actually able to see their full inventory because we're integrated with their website, their stores, or other e-tailers. So they can facilitate that transaction in-store even if they didn't have the inventory in-store on hand. The next is they use our media agency in China, Curiosity China, and they also use our warehousing services, Fulfillment by Farfetch. Now, Thom Browne truly view us as their digital partner. And this is a great example of the stickiness of our partnership and the continued growth of a partner that they can have by utilizing multiple services. Now, Ami is another really strong case study. They are a long-standing partner with us, and they were one of our very first clients, and it's been incredible to watch them grow over the years. Now, they approached us originally to reach new international markets and expand their brand offering globally. So what we did with them is similar to Thom Browne. We launched a global website, including global logistics and localized sites in Asia, which were all very successful. And overall, we delivered on their ambitions with over nearly 50% of revenue coming from international orders in year 6, which was up from 27% in year 1. But more importantly here, over the course of the partnership, we continued to push their brand offering. And there are 2 notable callouts. Now, the first one is the expansion into women's wear. We're supporting a completely new category and helping them create a completely new customer base and a new customer experience online to support this category. And women's wear still is a huge category for them, and they're still investing quite heavily in women's wear. But the second is launching a connected retail shopping journey, which is a great example of bringing together the offline and the online experience. Now, again, because we can see all of their inventory, we are enabling customers to shop online, see what was in store, in their size, and make an e-reservation in their stores, meaning we were driving people back to physical retail. We also facilitated click and collect and same-day delivery across all of the AMI locations. So they've seen huge success in rolling out the first stage of connected retail. The second stage will be exploring the introduction of in-store technology to elevate that customer experience. And doing all of this means we have delivered a 58% CAGR. This is another example of how we can drive value to our partners by delivering on their strategy. Now, the last case study I want to cover is Harrods. So Harrods is such an incredible business with a hugely international customer base. It's important to them to always be able to reach that customer base. So they came to us originally because they wanted to replicate the same world-class in-store experience online. And that also included using our e-concession inventory we already had on the platform. Now, what they realized is we already had those connections to these brands, and they didn't want to have to integrate to each one individually, which would be costly and time inefficient. And by using our e-concession product, they've been able to unlock direct inventory from super brands such as Burberry, Gucci, Brunello, Zegna, and coming soon, Balmain. Harrods has been able to increase the inventory from those brands by nearly 500%, while also increasing the number of styles they can offer to customers by 25%. So more styles and more depth has meant the growth of e-concessions brand tracking at nearly 40% CAGR since 2020. So with one single integration into the platform, we can be the partner of choice to power e-concession for luxury brands and retailers, ultimately resulting in better inventory choices and a better experience for the customer. Now, Harrods is about extraordinary customer experience and about extraordinary products. And by partnering with us, we've been able to deliver the same experience online as they get in store. Now, to summarize the partnership with Harrods, I wanted to play a short video from Michael Ward, the CEO of Harrods, who has reiterated the main reasons we are the technology partner of choice for Harrods.
Harrods is all in the world, but its customers are truly international from every continent. The ability to access Harrods from anywhere in the world through the internet is hugely important to us. Our customers represent the absolute top of the high income scale, and they come to us because we have the most extraordinary products and the highest level of service. Our replatforming with Farfetch is aimed to give the customer exactly the same experience online as they get in the store. The process of replatforming with Farfetch has been an absolute dream. We've worked in partnership, we've hit every deadline, and we've hit every budget, and I have never done that on any other project. Harrods is the best retailer in the world, but we're not a technology company. What we have with Farfetch is a perfect technology partner.
So now that we've seen how it all comes together, it's important to note we don't just stop here. And as I said at the start, we're just at the beginning of our journey. And there are really 3 areas that we need to focus on. The first is deliver. So we have significant commitments in the pipeline currently, and we need to focus on delivery and implementation for our new clients. And by doing this, this means that we'll be recognized as the leading platform for luxury, attracting new customers in the future. The next is scale. We need to continue to scale the newer products in our feature set that I took you through earlier. And by doing this, we'll attract additional customers and drive further profits. And the last is evolve. We need to continue to evolve and differentiate our products and offerings to meet the future needs of our clients. And by doing this, we open up the addressable market in which we can operate. So all of this means more clients, greater addressable market, and higher profits. And currently, we're on track to double our client base over the next 3 years, and that's just with the commitments we have today. So we're starting already with a really strong base and excited to add Ferragamo, Reebok, Bergdorf, and Neiman Marcus to our portfolio next year. And pending regulatory approval, we'll be adding in Net-a-Porter, Mr. Porter, and the Outnet, plus Cartier and Chloe, followed by an additional 4 Richemont brands in 2024. And in 2025, we'll launch Yoox as well as the remaining 12 Richemont brands. However, we think there is considerable upside as we have a robust pipeline outside of these commitments, and there's still huge potential for our other modules, which are not included in this graph or in the figures that Elliot will take you through later. We have invested in the platform, and as you can really see now, it's really starting to pay off. So, I just wanted to end with 4 key takeaways from today. The first is that our platform services are really tailored to meet the specific needs of the luxury industry, which we've demonstrated in our case studies. The second is that we have a scalable, integrated platform with unique module capabilities. The third is that our economic model is focused on margins and profitability. And the last, and probably the most important, is that we have a significant step change expected in the next few years. And as I said before, we are just at the beginning, and we are so excited for the future ahead. Thank you.